Easy guys, warrior. Monday man, new week market outlook. Just got the dollar chart here, DXY, which represents the value of the US dollar as a whole. And yeah, we're currently in an uptrend. This is the daily time frame. I posted a video, I believe it was the 1st of January, and I actually called this dollar reversal. Just pop to the weekly real quick. So I published that video on the closure of this red candle at the bottom here, and I pretty much forecasted a major dollar reversal. As you can see, we're in this downtrend. We sold off quite heavily from this level, and I basically called a reversal. I said we could move into at least 104, 105. Well, 104 has been achieved, and so is 105. And long story cut short, we are in an uptrend currently on the daily time frame on this DXY chart. So what does that mean? We can look for sells on euro, on gold, pound, etc. We just got to follow the DXY. So we recently created a new higher high here, and we've actually retraced since and come back down to this level, which was previous resistance, which has now turned into a level of support. And I'm looking for a buy continuation on this chart. And when that happens, and when we can identify when that's going to happen, and when it does happen, we can then take trades on the Euro USD, for example. I've touched on it in a few videos that the DXY is the complete opposite of Euro USD. So when the dollar index is given a buy signal and is actually like in an uptrend, you will find that Euro USD is the opposite and is actually in a downtrend. So if we look at Euro, similar scenario, NFP happened here, sold off quite heavily. What have we done since that? Well, we've actually retraced quite healthily and naturally, and we've done exactly the same on the dollar index, but the other way. So we had the pump from NFP here, and then what have we done? Retraced to the downside. If you take a look at Euro, we've retraced to the upside. So you can use it as confluence to take trades on the Euro, for example. And that's what we're doing essentially. DXY looks like it's ready to pop for a new leg to the upside to go and create a new higher high. As you can see, this market hasn't actually retested any of the new higher lows that we've created. So this was one of them. Come right up. This is a higher low that was formed, smashed through, and then rather than retest this higher low, which sometimes happens in trending markets, we've actually just gone on to create a new higher high anyway. And again, this is a new higher low that was formed. Higher high, higher low, higher high, higher low, higher, So this was the higher low that was formed. This hasn't been retested either. And generally, overall, we've just formed nice market structure, which is in an uptrend. Pretty strong, healthy, normal-looking uptrend market structure. So straight away we know to buy, unless we break this level, for example, which is the 103 level. We are still bullish. So you can use this and plot this. You can use it to your advantage and actually be on the right side of the market, basically. So you can actually become profitable and succeed consistently. That's why it's so important to actually keep on track with the dollar and just check in with it. Because if you don't know where the dollar's going, you're just going to struggle, basically, if you're, taking your own trades rather than copying off someone else kind of thing. It is important to just gain your own understanding of the market rather than stepping in blindly because you're just asking to get decimated. yen pairs, touched on those in previous vids. They've just been beautiful, to be fair. Amazing to trade. Massive, strong uptrends. It can be quite simple, really. But as far as opposites go, I was on about the correlation with dollar index and euro USD. Gold, rather than the DXY, it respects more so the 10-year yield, more so than the DXY. Like, there's been times in the past when, say, for example, the dollar has sold off, and you would think that gold will do the opposite, like euro USD will have. But in some cases, the dollar, just because the dollar's weak, it doesn't always mean that gold's gonna fly, and go and create new highs and turn bullish. Basically, it's more dependent on the 10-year yield. So therefore, the 10-year yield is more reliable than the DXY if you're looking to trade gold. So this is just 10-year yield government bonds tied into the US dollar, obviously. And when the government bonds trade to the upside, gold will sell, similar to the opposite correlation with Euro USD and the dollar index. So if you can locate, basically, if you can use your discernment and actually find out which way this market's going, you can utilize it as confluence for your gold trades as well. So as you can see, this was NFP. I had this level marked anyway, because if you look to the weekly, so I had this level marked. As you can see, we're blatantly in an uptrend on the weekly time frame since 2020, since COVID. So basically, what I did here was just plot this most recent higher low that was formed, right? And then what happened? Well, this level was plotted, and then let's take price back to, say, here, right? Let's do a little replay. So this level's plotted. Sweet. Just run it. This is what happened. So started off, looked like we were continuing, came back down. So at this point, you're like, right, okay, if I'm looking at gold, at this point, gold would have been given the buy. If you look here, look, Thursday, let's just say Monday the 29th of Jan. Monday the 29th of Jan. 29th. So, as you can see, Monday, this here, if we zoom in slightly, this is what happened from Monday, 29th of Jan. As you can see, we had 1, 2, 3, 4 bullish candles and overall had a 400 pip plus move to the upside, right? So what was the 10-year yield doing them times? I think it's just reset this playback feed, but one of the 29th of Jan was doing the exact opposite on the 10-year yield. 1, 2, 3, 4 bearish candles on the 10-year yield, which shows a direct opposite correlation with gold. So there you go. And then what happened if we just restart this from here? So you can see that correlation. So then, boom, we've tapped into our level that we plotted on the weekly, that we've come back down to retest for the second time for long continuations. And then instantly, bang, took off on that same day that NFP came in and continued to push to the upside. So it's like, okay, at this point, you're like, right, okay, we may be following this uptrend on the higher time frames now. So that will bring us where we are up to today presently. So we broke above, carried on, whatever, come back down, retested, and this is where we are at today. If you just wait for this, there we go. So obviously at this point, knowing that this market is in an uptrend on the weekly, we had a big massive retracement. We've gave proper signals, took off slightly and come back down for a second retest, which is quite like if it does that, it kind of makes it even stronger because you've not just tested it once. You've come back down for a second retest, which is like kind of solidifies it, especially if we reject the level and carry on. So that's what we've done. And since that, if you look at like since that NFP day, Friday the second of Feb, you have pumped up here on the 10-year yield from Friday the 2nd of Feb. What have we done here from this Friday the 2nd of Feb? Well, as you can see, gold has done the opposite, and we've actually had this leg to the downside. We've pulled back since quite nicely. That probably started from the 14th. Just pop to the 14th. Yeah, started from the 14th. So we started it from the 14th. We had a couple of bearish days, but as you can see, it wasn't like, even though we had a bullish day on the Friday the 16th, which was here, we actually didn't get a bearish day. So like, it's not complete, like it's not exactly the same as a correlation than what Euro USD and DXY is. If you take a look at the Euro and DXY, like if the dollar goes up, this chart goes up, Euro USD will go down. There's just no disputing it. Like that is like, no if, buts, or maybes. That is kind of, a given. Whereas with pound, for some reason, it's not the same. If you'd think, right, okay, well, if it's doing it with Euro USD, then it will with GU. Well, no, it doesn't. The most directly correlated are Euro USD and DXY. But going back to gold, it's not always bang on. As you can see, these 4 days that I said before, and gold went up, like you will get the bang on correlation at times. Sometimes you won't, but the general thing to stick by is, if I know that the 10-year yield is trading to the upside, then gold is way more likely to actually be doing the opposite. So it's important to actually follow it. So we're lining up quite nicely here on gold for actually a short into 1975. Been calling this one for quite a while. We got this level here, which you can see these daily candles. This sell looks like it's forming quite nicely. If we break above this level, then we can go looking towards 2060. And if we break this, then we're going to fucking rock it, basically. But I'm more fond of the idea of a short into 1975 for then a big major buy from the 75 level to go and break all of this and go and create a new high, maybe even a new all-time high than was previously set here. That idea to me is better. Why is it? Well, it's just not a good level to buy from where we're at right now, is it? Like, obviously, if you were to step into this gold market and buy it, this entry point is shit. Like that is not where you want to buy from. Most, like, basically the closest, most best level to actually buy this market from is the 75 level. I mean, you've got this level here, which I guess is closer than that, but it makes much more sense for this market to actually go and retest 1975, and we will get a major reaction from that level. So you got to look at the market structure. It's looking pretty good, to be fair. You have to build confluences. Right now on gold, we're just following the market structure. This is a potential sell that is forming. And if we scale down to the 4H, you can see that we've blatantly rejected this level. Not once, not twice, multiple times. We had this initial sell-off from the NFP here, retraced slightly, right? Sold off, come back up, retested that, spiked above, but failed to remain above and actually closed. Instant rejection back down, boom, below this level. And then we ended up dumping off, right? So we've come back up to this level once more, and this is clearly a significant level. It's not no bullshit level. It's clearly, like, you will level up massively in trading and finding trades if you just Like, it's better sitting on your hands and waiting to take a trade from a significant level like this, rather than just jumping into just try, like, for like the sake of it. You're just much better off, and you're increasing your overall probability and chances of winning in trading when you do this, simply just by trading, whether it's a buy or a sell, from a significant level, preferably a daily level. Like, the higher the time frame, the stronger the level. So it's like this level here, for example, 1975 level, boom, daily chart, simple. Okay, I'm going to buy this from 75. More often than not, that buy will come in, mate. Like, even if it's not like, even if you just get a little pump from it and then eventually it goes down, you are pretty much guaranteed reactions from these levels. So yeah, man, pop back down to the 4H. Yeah, so rejected again, formed quite nice price action for shorts into 75, really. I mean, at the minimum, you can target, this here, pretty much the 1990 level, which is pretty juicy. If we were to roll over entries here, for example, stop loss above the level, something like 60 pips will do. Say 2043. Yeah, boom, and then let's go, bang, just down to 1990, 7-to-1 risk to reward ratio, 470 pip move just from to there. Yeah, these short moves can be crazy if you can actually catch them. You can actually capitalize a lot of pips from gold if you actually just simply get in at the right time, basically at the right location at the right time. That's all you kind of got to focus on gold. So how can you do that? Well, it goes back to the major levels and the significant levels. Identify those levels, take trades from them. Simple. So that's trade idea. You've obviously got euro shorts. Look at that. Beautiful. Yeah. So obviously we know that if the DXY pops off from here, euro's going to dump. We already know that. So, and similar things going to happen with pound. I think pound's been generally slightly stronger than euro, but yeah, I can see it in pound definitely as well. I'll roll over into the 25,250 level. Let's check AUD USD. You can see that, like, if you get major dollar strength, they generally tend to move the same, but you will always get a currency that's like, because they're not all at the same strength, so some are better to trade than others. If you can determine what the weakest currency is against the dollar and you're looking to sell it, then you're better off picking that one. In this case, we can see weakness in the Aussie USD. I think Aussie's going to be weaker than pound, because if you go to GA, which is pound against the dollar, we've started this new upside leg. So that means the pound is stronger than the Australian dollar. That's why we're getting this little leg. So if you were to capitalize with this dollar strength and short one of the major pairs, it might be better shorting Aussie USD rather than pound USD. Even though, like, GU might, even though GU's probably going to roll anyway. But yeah, putting it into perspective, you can see a little retest of this high that we broke actually on NZD USD. Interesting. But what we've also done is come up to actually retest this level that we broke originally, tapped into this level. Yeah, this is a one. If we just get rid of all this, this is one that I identified originally. At the same time, I called the major dollar reversal on the 1st of Jan. I called this short on NZD USD, which has performed quite beautifully. We're pulling back now. Major descending trend line on the weekly time frame, like major. Look how many times this thing is actually tapped. So we had the most recent lower high formed within this market on the downtrend, and price come and tapped into that level, right? To a fucking decimal. Not only that, we've also rejected this major descending trend line and closed below it. This weekly candle's closed below it. Like, you're not getting a better setup than that. Like, that is like textbook, really. You're like, yo, like I've got more than enough confidence to enter this trade. Bang. What happened? What happened, bro? After this candle of this weekly closure, boom. 1, 2, 3, 4, 5 weeks bearish, sold off. Perfect call. Beautiful. Building confluence. You're not just relying on a recent lower high. You're coupling it with overall. You know this market's in a downtrend on the higher time frames. Bro, like, look how long this market's been in a downtrend for. Years. Like since 2021. Like literally 3 years it's been in a downtrend for. Not that that's like a really long time, but 3 years, you know what I'm saying? So straight away you'll think, right, okay, if I was to follow this downtrend, what point can I get in? And then there you go, you've identified your points. You've got the major descending trend line, which serve as dynamic forms of support and resistance. And then it's great to just trade from higher lows or lower highs set within the markets as well, because unless we break those levels, we are still in the current trend. So it's like, unless we broke this level, we're still in a downtrend. If it did break this level, then you could be like, right, okay, we know that that's a break of market structure. So now we're actually going to look for buys instead. But that's not what happened. We respected the market structure and continued selling off. So with that being said, I think I touched before on Euro NZD and on how that will with that NZD weakness, you could get buys. And I think what happened was, what existed at the time, like the only what existed at the time, if we go, yeah, so it was like Monday the 1st of Jan, so it was just this price action that existed. And I think in that video I touched on the fact that if that NZD move come in, which it did, that Euro NZD was going to have a little pump to the upside, and that's exactly what happened as well. To be fair, we had a lot of fucking around at this level, a fair few weeks of just waiting for this move to come in, basically, and then boom, we've came in. Look at that nice, beautiful pump following it, and you can see, because we've actually broke down again now. We had a beautiful pump from that, and then bang, retrace, started to break down, come back down to the initial level, I believe. Let's see. So that's where we're at now. And it's gave another buying opportunity. This is the four hourly chart, and you can see we've been in a downtrend. Like that whole retracement since the 22nd of Jan, you can see we've been in this nice, healthy downtrend, to be fair. Since. Why is that? Well, it's because of short-term NZD strength. So if we compare this to the recent NZD USD chart, since this NZD strength, we've had this sell-off on Euro NZD, because when the NZD is stronger than the euro in this case, which it was, that's what we will get. So on this one, it's a case of, we've had this beautiful pump, but at this point you've got to think sellers are still stepping in. They're like, right, okay, and you like can't really say that they're wrong. You're following the trend, cool, but at some point down the line in any trend, it's going to change at some point. So we need to see a break of market structure, really. I mean, you've got this trend line. We haven't retested it. What can happen is we can break above a trend line and we can come down and retest it for long continuations, which is one scenario. I mean, we're pulling back after this power move, perfectly normal. And then what is the most recent lower high that was set within this market? What level would we need to see as a break of market structure for this on the 4H to become fully confirmed bullish? Well, not fully, but this level right here is the most recent lower high set within this market on the downtrend. So if you were to pretty much the 1.765 level, so that is a level that you could take a buy from after we break it. So a break above, a retest, buy from, bang. Or you could, of course, look for a buy from a retest of the trend line somewhere, let's say here. A retest of the trend line when it comes back down, bang. One scenario. But obviously, that's only going to happen like this long move is only going to happen with NZD weakness. And if you look at like the NZD, look, we're starting to leg down now, and continue this potentially continue this downtrend which began here. So yeah, man, a couple of setups, bit of a long video, educational content. So we talked about the gold sell. I'm looking to sell the fuck out of this pair. Euro shorts already started coming in, pound shorts. Let's see how this goes, man. And how do we gain the confidence to sell euro, to potentially short gold? Well, the dollar index is a perfect indicator, and we can actually use that. It builds confidence. So you're like, right, I know that like this is giving me all the signals now for a continuation of this uptrend. That is all I need to know in order to short euro. That is all I need to know in order to potentially short gold. You know what I mean? So yeah, man. I think that's it. So